Hey, it's Dan. Welcome back. You're watching iAllegedly. And I've got a good one for you today. I've got Jack Hanney. We're in Laguna Beach. We're going to discuss business. We're going to discuss the economy. And, let's get right into it. Jack, thanks for being here.
Well, thank you for having me. It's a beautiful day, spectacular location. Couldn't be nicer. You know, the economy, what's concerning is since the beginning of the year, many have seen a stock market rally. It's a sucker's rally. It's a bear market rally. It's a dead cat bounce. And what most don't know, what's widely heralded and known as the dot-com bubble of 2000, the NASDAQ lost 39% of its value in 2000.
39%.
39%. Very similar to last year. Very similar to 2022. But then in 2001, the NASDAQ lost another 21%. And then in 2002, the NASDAQ lost another 30%. So in 2000, it lost nearly 50%. But in the ensuing 2 years, it lost another 50%. And that's what investors need to be worried about.
Right, exactly. You know, people label like, hey, the dot-com bust was in just 2000. It lingered. 2008 lingered, and that we're living through, difficult economic times right now. And I think this is just the beginning. I think we haven't seen anything yet as far as a downturn. We're seeing major problems with real estate right now that are just getting worse. The interest rates are going up, week after week. You're hearing more and more about how mortgage rates are at record highs right now. We haven't seen, rates like this in 15 years. But we just talked about this walking down here about how housing prices have gone up so much in the last 2 years that people cannot afford the average house.
Well, what most people don't realize is over 60% of the money that's out there in circulation right now was 60%. Printed in the last 2 years. So in the last 2 years, over 60% of the money that's out there in circulation was printed in the last 2 years. And if you look at what happened last year with the market, and if you look at this administration and their policies, straying away from our energy independence, and if you see it what the Fed's doing with raising rates and Jerome Powell in desperate hopes of fighting inflation and not being very successful at it, they're killing the labor market, killing the real estate market, and absolutely just trying to drive this economy into the ground.
Well, it's working. Think about this. Layoffs. We've had so many layoffs this year. They're trying to tell us that the job market's good right now and that we have this very low unemployment rate, which I just don't believe the numbers at all. I think that that the unemployment numbers are much higher. They're not counting everybody. And you're seeing all these layoffs in tech, in construction, in finance right now. It's basically every industry.
Well, they're not looking at the labor participation rate, right? They're just looking at the unemployment numbers. But what happened with COVID over those 2 years and working from home is people were asked to return to the office. So many people voluntarily retired or decided not to go back to work. So the unemployment numbers do not accurately reflect what's going on in the labor market.
Absolutely. And plus, it is destroyed. You've talked about, understanding New York. She used to live in New York. And think about this. It has been anticipated that the lack of workers being downtown destroys New York's economy by $15 billion a year. You don't buy cab rides, you don't buy lunch, you don't go to the stops, you don't go to the drugstore. People are not spending money, and it's destroyed New York City.
Well, you don't have the dry cleaner next to the office building that's dry cleaning the work shirts because you're now working from home.
Right.
The cafes located in proximity to the office buildings, the building managers, commercial real estate has been absolutely destroyed. And there's a saying, if you owe the bank $1 million, you have a problem. If you owe the bank $1 billion, the bank has a problem. And that's where we are. That's where we are now. Because at the end of the day, the commercial real estate building, there's a mortgage holder and there's a bank that's not getting.
Who is making those mortgage payments? How long can they put things off? They can't. I mean, these people didn't make their rent payments in these small businesses for years, and now the mortgages are coming due. We're finally starting to hear of commercial real estate and commercial that they're defaulting, and that they're starting foreclosure proceedings on very large properties here in Southern California and around the country. It's starting to happen.
Well, I mean, there was this mortgage forgiveness for 2 years. Now they're looking into student loan forgiveness. That's at the Supreme Court. I mean, which is completely absurd. They already bought votes during the midterms by lowering the gas prices, by releasing our strategic oil reserves. Now they're trying to buy votes ahead of 2024 with student loan forgiveness.
It's ridiculous. Well, what about people that don't have student loans? People that navigated this without getting in debt. Where's our reward?
Or people that paid back their student loans.
Absolutely.
That have finally paid in full, paid off their student loans after years of working and sacrifice, because that was their commitment.
Yeah.
That was their obligation, and they paid back that loan.
And they're going to just give that money out. You know, there is no more stimulus. There is no more, free money out there right now. You're starting to see all these PPP loans and EIDL loans that they're starting to investigate, where there's a lot of fraud that happened during that time. And they're starting to prosecute people around the country for that. So that's a whole nother area where these people just took advantage of the system, and they're starting to face justice. So that's one good thing out of this.
Well, there was very little oversight and very little regulatory requirements with the PPP loans and all the applications that were being filed. But there's a warning here. You have to look at this administration and their ESG 401ks and their liberal progressive policies.
Say what ESG is again.
It's environmental, social, and governance. And this administration is so hell-bent on liberal progressive policies that the applications coming in for renewable energy, electrification of vehicles, charging stations, you can just imagine how rife that is with fraud.
Think about the amount of U.S. Postal Service just announced they were buying 9,250 electric vans to deliver the mail. And they just signed a contract for 16,000 charging stations to charge those vehicles. And, I don't see it happening yet. I mean, I don't see it working yet.
You also, there's a subcontractor out there that's responsible for building those charging stations. Then you have, whomever is providing the electric vehicles, whichever auto manufacturer managed to lobby the most in Washington and line the pockets of those particular legislators, right?
But the funny thing is that they're also buying 9,250 Ford vans that are gas powered too. So they're going to it's going to be half and half. So you're not going to get all electric, but that's, it's a lot of cars. I mean, it's, 18,500 cars that are being bought, and you're going to have half of them are going to be all electric. So it's very expensive. They're more expensive than the gas powered vehicles, to say the least. And, people need to look at the stock market. It's basically a roulette wheel right now that is not, not everybody should be on right now. People need to look at their finances. They need to look at their investments. I always tell people to get solid advice. And, I get a kick out of the fact that so much money is managed by young people, that we hear that there's, billions and billions of dollars managed by people that are under 27 years old. And that is crazy. The last economic downturn, these people were in high school.
Well, that's just it. Most financial market strategists and most FAs, financial advisors, and CFP, certified financial planners, they were not CFPs or FAs during the 2000 dot-com bubble or the 08 subprime mortgage crises. So all they know is easy, free money since 2008. All they know is ultra low interest rates, easy money. We saw what happened over the previous 12 years with more than quadrupling our money supply and 0% interest rates. But these FAs and CFPs don't know how to navigate this market with interest rates going up and with the money tightening.
Everything is
by the Fed.
Everything is more expensive. You've got business is paying more for absolutely everything with inflation and with debt. People don't realize that debt affects absolutely everything. It It affects lines of credit. It affects credit cards. It affects auto loans. It affects financing for your company. And most importantly, mortgages. Mortgages are gone and they're through the roof. You're going to see a lot of people have 8% mortgages before the end of the year. And people freak out when I say that, but it's absolutely going to happen.
Well, what about all those adjustable loans out there?
Oh, it's unbelievable. They're coming due right
There's
now.
going to be adjustable loans across the board, 7-year interest-only loans that are adjustable ARM loans, that the rates are suddenly, because it's one thing if the rates tick up a half a basis point or say a basis point, but rates have now gone from negative real rates to they're going to raise them to as high as 5.5%.
That's unbelievable. You know, and the other thing is right now they say that 25% of the people borrowing money are borrowing on HELOCs and getting the lines of credit. And again, those are all adjustable. You don't get a fixed line of credit. And if you do, the interest rate would be outrageous. But people are borrowing themselves to oblivion. On credit card debt is at an all-time high. People are borrowing more money than ever right now. And, you know, they just cannot afford this right now.
They have less cash reserves. Americans have less cash reserves than at any other time in history right now.
Yes.
And they're living on credit card debt. And like you were saying, I mean, you look at a 30-year fix that was 2.75. As recent as a year ago, now with that same 30-year fix at 7%, that interest payment, that mortgage payment is more than double.
Right. And the other thing is that a friend of mine just told me this one last week, and that was the average home that's $540,000 across the country. Right now, you could get that loan with 2.75% interest rate, but that same house, you could only get $350,000 loan. You can only get a $350,000 loan with the interest rates, how they've increased so much. So interest rates have gone up so much that you can get basically $200,000 less house. But where do you get a house for $350,000? So anywhere in the country right now. It's just it's outrageous. Houses are so expensive. You know, financing is going through the roof right now. So.
Well, one thing that your viewers need to be aware of, you have every economist. You have Nouriel Roubini, right? You have Stan Druckenmiller. You have Ray Dalio, the most successful hedge fund manager of all time, co-chief investment officer of Bridgewater and Associates. Jamie Dimon of JP Morgan forecasting an economic hurricane is coming. You know, the warnings are out there. And then you have central banks with their gold purchases, the most on record in history.
Yeah, in 80 years, it's absolutely increased to record levels for gold purchases. But you also have to look at municipalities that are buying gold. You have to look at states. Mississippi just declared itself a state where they want to use gold as currency in the state, and they want more gold purchases for state government.
Well, the Texas Teachers Pension Plan is entirely in physical gold and silver. And then Dallas, Texas has its own dedicated, secured, private, non-governmental depository because they wanted their metals out of the New York Fed. And they wanted their metals in the great state of Texas. So they actually built a depository solely for the Texas Teachers Pension Plan.
Oh, that's amazing. That's great. You know, so clearly with Patriot Gold, guys, if you are looking for retirement, you want to have a no fee for life IRA, the best place to go to is Patriot Gold Group. Call them today at 888-330-1431. They will give you a free investor guide. It's no obligation. They will answer all your questions. But this is clearly the best place to be. For 7 years in a row, best-in-class service, #1 rated with Consumer Affairs. Patriot Gold is definitely the place to go. So many people from iAllegedly have been to Patriot Gold. They've just gotten great customer service, and I'm so happy, Jack, that you're always here. But it's great to have you on speed dial too. I got to admit, to be able to ask you questions and stuff is very cool. But when we look at people's retirement, and one thing we talked about last time that I got a bunch of response was the fiduciary. You know, so many people need to look at getting responsible advice when it comes to their investments. And you mentioned the fiduciary. Can you mention that again this time?
A fiduciary is a FA or a CFP that only invests in the sole interest of their client. Not the brokerage house, not their own commissions, but just in the sole interest of their client. In fact, I have an interesting little equation for you. May I share it with your viewers? Now, suppose you had $100,000 in a 401k or an IRA, okay? And suppose you had $100,000 in physical gold and silver. Now, let's suppose over a 30-year period, each of those returned 8%. So each of those investment vehicles are returning 8% over a 30-year period.
Okay.
Now, the 401k that has a 3% management fee with a CFP or an FA, after 30 years, the total balance on that account would be $432,000 after 30 years.
Okay.
The $100,000 that you had in gold, same 8% annual return with no management fees, no fee for life. After 30 years, it's $1,006,000.
Wow.
So the 401k with the 3% management fee, they get the lion's share of your retirement. In fact, the founder, John Bogler of Vanguard, was interviewed, and he said, we don't tell people that you see in this industry. Because once you factor in the management fees and interest, you're down to a pretty paltry 1% or so on your traditional standard 401ks or IRAs with a money manager.
Well, we talk about metals a lot here. I love metals. I love the metal stocks. I love physical metals. But I really think with everybody buying physical gold right now, they must know something. These municipalities must know something. These billionaires must know something. And I think we need to look at this.
Well, you look at the de-dollarization trend around the world. Around the world, that started with this administration aggressively imposing sanctions on Russia for invading Ukraine, with kicking them out of the SWIFT banking system. Once you have Saudi Arabia, China, and Russia moving away from dollar-denominated assets.
And by the way, silver, oil is all priced around the world in dollars.
For the time being.
For the time being.
For the time being.
And now, all these other places are looking at the yuan, and it could be the end of the petro dollar as we know it.
And the introduction of the petro yuan.
So guys, when you look at the economy and you look at everything that's happening, open your eyes to this stuff, guys. There is so much happening right now that's just not normal. And, you can try to say, oh, it's going to be fine. But inflation is a killer, guys. It is killing companies. It is a tax on every single one of us that, it's unfair that we have to pay. When you see these CPI numbers, they don't even include food and energy. And we are seeing so many people that are getting victimized by even natural gas prices this winter. And now that the sun's coming out, you're seeing people that have had 100% increase in their natural gas bill. You've got to do something to protect yourself. You've got to do something to understand that this inflation, I don't see it ending.
Yeah, the government's inflation numbers don't factor in food or fuel. So show me a senior who doesn't need to eat or heat their home.
Yeah,
and the real rate of inflation is as high as 13, if not 15%, which means if you have a rate of inflation that's as high as, say, 13%, and if you have $200,000 just sitting in the bank, so you have it sitting in the bank, you think it's safe, you're losing $26,000 of purchasing power every year, meaning you are losing $2,000 a month by keeping that $200,000 in the bank.
Wow.
And for every 1% the dollar loses purchasing power, gold goes up 1.9% and silver goes up 3.3%. That's just the math.
One thing, you just mentioned the banks. One thing I want to cover again is that last time you were on that I got a bunch of emails on was you talked about bailouts versus bail-in with the banks. And during 2008, we saw these banks go down, and Jack knew everybody who merged with everybody. And with Dodd-Frank, they've talked about bail-ins. And, your money in your bank is not safe. And we've talked about this time and again. We all have to have banks to pay our bills. But I always recommend that you have multiple bank accounts, different locations, different places so that you're protected. Can you cover that real quick?
Well, we all remember back in 2008, banks were too big to fail. Meanwhile, JP Morgan has now taken over Chase. Wells Fargo has taken over Wachovia. Bank of America has taken over Merrill Lynch. So they've only gotten bigger. So with Dodd-Frank, the Fed said they were not bailing out the banks this time. We're not bailing out the banks. So with Dodd-Frank, what they instituted is what's called bail-ins, which they used in Cyprus, where you, the depositor, either can have a 10% haircut on what would be your savings, your deposits, but then most Americans have this false sense of security, I should say, about this FDIC $250,000.
And you brought up something in the last video that I looked up, and you were right, and that was that the FDIC insurance last time during 2008 was $100,000, and since that time it's been raised to $250,000.
Well, they saw back in 2008 everybody panicking and pulling their money out of bank accounts. So then they went and they raised the limit from 100 to 250,000 to provide this, again, false sense of security. Because if a bank is to go under, what happens is your $250,000 will become shares in that financial institution, and you're no longer insured as a client because you are now a creditor.
The other thing is we are all victims to what they call fractional banking. And the fractional banking is, back in the day, we talked a lot about your father and all the times you and I have been together. And back in the day, you'd put your money in the bank and your money was in the bank, and now that percentage that the banks could have to back your money was less and less and less, to where basically now it's nothing. So they're basically is using our money the second it gets thrown into the ATM or deposited. They're using your money to lend it out and pay people and do other things with it.
Well, have you noticed the limits on withdrawals?
Oh, absolutely.
About the dollar amount? And even ask yourself, why, when you go and if you're to withdraw or deposit $10,000 or more, does a notification have to be sent to the IRS? Why? They want to oversee everything.
Yeah, absolutely.
And I mean, if you try and go to the bank and try to take $5,000 out, they're going to tell you to wait at the window. They're going to want you to fill out paperwork. They're going to ask what it's for. Meanwhile, that's your money.
You brought up such a good point about gold last time, is that gold, physical gold, is your gold. And if you want to take it and you want to go buy euros with it, you want to go buy yuan, you want to go buy anything with it, it's your asset to do what you want with it.
Since the beginning of history, gold is the currency of kings, silver is the currency of gentlemen, and debt is the currency of slaves. And we're $31+ trillion in debt. Since biblical times, physical gold and silver is a storage of wealth that has no counterparty risk, no political affiliations, can be converted into any other currency globally. You could have $100,000 in gold, Dan, and decide to travel to Europe. And if you needed some euro, you could simply go and take one gold American Eagle and be in receipt of 2,000 euro on the spot, no questions asked. You could then travel to Japan, and then you could get some yen. You could go to Russia, get some ruble.
Yeah.
Any other currency globally.
Right now, we've heard a lot about cryptocurrencies, and we just had another exchange, another bank go down, Silverton Bank, that is affected all these different places for withdrawals. Guys, what is it a hedge against? I mean, seriously, it is not seen an economic downturn. It never saw 2008, so we don't know what it's a hedge against.
Well, you look at Warren Buffett and Charlie Munger, and Charlie Munger is 99. These are the two heads of Berkshire Hathaway, but have a pretty good pedigree, a pretty good background. Both of them say that cryptocurrency is the biggest Ponzi scheme in history. Across the board, any economist who's worth his salt will tell you it's the biggest Ponzi. It's not tied to any real physical asset itself at all. It is no more than a binary code. They say there's a limited availability and a limited number of Bitcoins, 21 million Bitcoins.
Right.
But no one knows its creator. That remains a mystery. It's a program. It's a program on your computer that You have someone like Sam Bankman-Fried can start up FTX and donate tens of millions of dollars to Democrat politicians and suddenly fraudulently take billions of dollars from investors. I mean, you could see your net worth in your investments in crypto go to zero.
Eviscerated
overnight. With a click of a mouse.
So all roads lead back to physical metals, guys. And please take a look at the good people at Patriot Gold Group. And it was Jack, again, it's a pleasure to have you out here again today. And guys, click the link below. You can get free information, get a free investor guide. Also, you can call 888-330-1431 to find out and get all your questions asked. 401ks, IRAs, everything backed by physical metals. But that's the future, guys. That's security. Look at what billionaires are doing. Look at what all the central banks are doing. They're doing this for a reason. And everybody wakes up when it's too late. Do it now before it's too late, guys. Get yourself into this stuff.
Well, give us a call. We'd love to hear from you. We'd love to discuss the opportunities with you. And we'd love to help protect your wealth and preserve your retirement.
Jack, thank you for being here. I always appreciate it.
Thank you.
Again, having, I'm the luckiest guy because I have all these great people on speed dial and you're one of them. So please don't forget to hit the like button. Please subscribe to the channel. And onward and upward, guys. I will see you guys very soon. And thank you again for being here, Jack.
Thank you.